You failed. Oh man. And now you failed again. And now you're crying, you're hurting, and you want to give it all up? I've been there, my friends. But let me ask you, why do we fall? We fall so that we can learn to pick ourselves back up. Okay. If you can take it, then you can make it. You need to believe you are better than your current self. Okay. You have to. And when no one is looking, that is the time that counts. And that is the time that matters. Okay. The long hours of staring at the charts, failed prop firm challenges, tears shed. I've shed a lot myself, staying up late, waking up early, been there, done that. That work you put in every day to chase your dreams of being a professional, profitable, you know, financially free trader. All of that, it's going to come to fruition. Okay. You do have to lock in, do not give up, but instead give it your all. I want to talk about the emotion of fear that we feel in trading. Fear of losing money leading to hesitation, and that leads to missed opportunities. Fear of missing out, which causes you to jump into bad trades. And then, like, the fear of being wrong leading to holding on to losing trades too long. Fear is a trade killer in many, many ways. I force a trade knowing that it's not necessarily my setup, even though my setup is on the arise. Or, like, I still work a 9 to 5 job, right? And let's say that I'm trading the New York session and I got about an hour and a half before I have to go and clock in at work, right? And I have the fear sometimes of missing my trade because I got to go to work. So I'll try to position myself in before the trade even happens just so I could potentially catch that trade, and it wrecks me a lot. You know what I mean? Fear is very it's very, very bad for our trading. If you can do better by managing your fear, and how can you manage your fear? You can journal. Journaling is the best way that you can simply um, write down your emotions, how you're feeling before a trade, write down your emotions during the trade, and write down your emotions after the trade. Journal your trades so that way you can understand how you were feeling before, during, and after, and you can kind of understand going forward. This is maybe what had you know what is the word that I'm looking for? Participation in my trading, if you want to say. Like, fear participated in my trading, leading to me taking a bad trade that then resulted in a loss. And then going forward, because of that journaling session and you continuing to journal like that, if you can identify fear is like your biggest trading um your biggest trade, what's the word for it? We could call it demon, right? It's a trading demon, okay? Because it's horrible. It's very bad for you. It's not a blessing. It's not an angel. It's a trading demon, bro. You just want to stay away from fear. If you can understand that fear is the leading factor to a lot of your losses, then before you take a trade, ask yourself, is fear leading me to take this trade? Do I have the fear of missing out on this opportunity? Do I have the fear that I'm about to lose this trade, or do I have the fear that um, it's about to hit my stop loss, but if I take it out, it might go in my favor? Do I have those fears? Long story short, the best way to kind of deal with that is not only to journal, but also to manage your risk. As long as you're managing your risk, you should never have the fear of missing out on an opportunity or the fear of price hitting your stop loss. You should never be fearful of your trading as long as your risk is managed, right? And how can you manage your risk? So let's say that you began risking 1% on your account, right? And you take a loss on that 1%. Now your account is down 1%. cut your risk. Instead of risking 1% again, risk half a percent, right? So now you're risking half a percent. If you're targeting a 1 to 2, you make back your 1%, and now your account is back to break even. But if you lose that half a percent risk, now your account is down 1.5%, risk a quarter percent, 0.25%, right? Target a 1 to 2. You make back that half a percent, then re up your risk to that half a percent on your next trade. If you hit a 1 to 2, then you're back to break even. But this is how you're going to protect your account and keep it from bleeding, right? If you lose that quarter percent, now you're down 1.75%. I would personally just stick to a quarter percent, but if you want, risk 0.12%, 0.125 if you want to be specific with the half, right? You just want to cut your risk in half. And then once you make back that risk that you lost before, example, 1%, we cut down to half. We make back that 1%, then we'll re-risk 1%. But if we lose that half, we're down 1.5. We risk a quarter percent. Once we make back that half, we risk half a percent again. We make that back that 1%, we risk 1% again. And that's kind of how we like come back from losing, right? Because if you're in a losing streak, why would you stick to the same risk for one? And why would you up your risk for two? That's how you can really make your account bleed, and that's how your account will suffer, right? And even if you're on a win streak, I definitely don't recommend upping your risk, or, like if you risk 1%, you win, and then you risk 2%, you win, and then you risk 3%. Instead, protect your profits. You risk 1% and you win and go up 2%. Protect that 2%. Maybe risk half a percent on your next position, so that way if you lose, you're only down half a percent instead of like losing a full percent. Like protect your profits and protect your account. That's going to make you long term profitable. And make sure you're journaling all of that, so that way you understand this is how you become a professional trader, and you treat trading like a business. Every business has to document everything that it does, right? And this is what you're doing. You're documenting everything that you do within your trading business, right? And that's kind of just what I wanted to touch on a little bit to start this video off. And now I want to kind of get into strategy, right? What is my strategy, my approach to trading? I like to trade the weekly um, power of three along with the weekly um, external range to internal range liquidity. Long story short, I like to specialize on the weekly time frame. So if you checked out the last video, the one that I titled "Watch This If Trading Pisses You Off," um, I kind of explained that last week. This weekly candle on AUDJPY kind of closed a CRT candle range right here. So like, if you know what the CRT candle range theory is, it's pretty much whenever price runs into like a PD array, either external range liquidity or internal range liquidity, like fair value gaps and whatnot. What it will do is it will create like a wick to the upside, close within that previous candle, and then it'll melt to the downside, targeting lows or whatever. You know what I mean? In this situation here, this was a CRT candle right here. And you can see that the last week it wicked below and then it closed within. And then for the third week, what you want to anticipate is a bullish candle to target this first week's high, right? Um, if you want to learn more about that, comment down below and let me know, and I can break down a little bit more about it. Truly, you don't really need to know too much about it, but if we're just kind of thinking and visualizing, right, external range liquidity was ran out right here. After external range liquidity is ran, we want to look for like that 4-hour market structure shift bullish and whatnot. Um, and you can kind of see over here, whenever it was ran by these candles here. So whenever it gets ran, I like to look for the 3 candle wick swing high, and I need to see that get closed over. And anytime a new 3 candle wick swing high um gets created, I just follow that price, right? So we have this one that gets created, and then we have this one that gets created, and then price closes through it, right? I would consider that a market structure shift bullish, okay? But this is the thing with market structure shifts, the more and more and more I backtest them and the more I see them, right? They need a displacing candle, which displaces and really destroys that market structure shift area point right here. It also has to create, a fair value gap. It has to create a change in the state of delivery, which closing over like up close candles and whatnot. It would have to also create like um what is it called? It has to create new PDAs for the upside and disrespect bearish PDAs to the downside, right? So in this situation right here, yes, we have this candle that closed over that market structure shifting point. What I'm looking at too, I know this is hindsight, but we have this bearish order block right here that price closed into, right? And so what I would have preferred to see instead is I would want to see a displacing candle that closed above that order block, right? The fact that it has not disrespected this order block, I would not be looking for any opportunity quite yet, just because I know that yes, a market structure shift has potentially happened, but we have to disrespect this bearish PDA. If the bearish PDA holds, then it's likely going to send price lower. And that's exactly what it does. It holds and it does send price lower. And it sweeps out this liquidity low right down here, which is the first weekly candle, which is the CRT, right? So with that being said, I would go back to looking for market structure shift points. It just swept out the weekly candle low, and we're still looking for a 4-hour market structure shift, right? Again, if you're confused or have any questions, please comment down below and ask away. Ask, why you look for this, why do you do this, what's up with this, whatever. Just let me know, and I can elaborate. So right here we have this 3 candle swing low, and then boom, price. This is a displacing candle. This is what I like to see, right? This right here is a displacing candle, creates a bullish fair value gap, creates a bullish breaker block right here, disrespects this bearish fair value gap. So in other words, is creating new PDAs and disrespecting old PDAs. So in this situation, what I like is when price comes down into this area, we can drop to like the 15-minute and look for a market structure shift bullish to then get in on this opportunity, right? With this right here though, since it's the weekly time frame, external range liquidity and a 4-hour market maker buy model that we're looking to take advantage of, I'm not going to go down to the lower time frame. What I'm going to do is I'm going to take my entry off of the tap. I'm going to set like a buy limit order, and I'm going to put my stop loss below the lows here, right? Yeah, I know it's a very big stop loss, but again, I'm taking advantage of the weekly, right? I'm not really looking to, because I don't care to focus on like news. I don't care to like do any of that, right? It's done a lot to my trading whenever I have to worry about news. And like I said, I work that 9 to 5, and if I'm like trading before, work or whatever, it's also messing with my trading, and that's just based off of my results. So changing my trading approach to more of a swing trading type, so that way I don't have to worry about times, I don't have to worry about news, etc., right? So with that being said, with this position, you enter it and I target 1 to 2. Obviously this position got lost, right? Lost right here, and that's okay. Losses happen. Like I mentioned, if you thought that you would win every trade in trading, newsflash, you won't. Like majority of professional traders have like a 50 to 60% win rate, right? And so you have to understand that you need to have an approach and a strategy that offers you either a 50% or more win rate and offers you a 1 to 1 or more risk to reward ratio on a consistent basis, right? Throughout that win rate. And that's how you'll be a profitable trader. And make sure that you keep your psychological emotions, all of that in check throughout your entire trading, right? And that's how you'll be better, right? So with that being said, we're in this position. We got stopped out over here, and we also took out this low over here. So this is the second candle's weekly low right here, and you can see we turtle soup that low right there. And right here, we are now in this area where the last three candlewick swing high was this point here. From there, we created this one right here. And you can see that this candle right here closed above it. It's not really much of a displacing candle, but you can see that these new PDAs, fair value gaps, are being created, and it's closing above down close candles. There's like bullish order flow coming in, is creating this fair value gaps. It's closed above all of this down close range right here, you know what I mean? So in my eyes, AUDJPY on the 4 hour is now currently bullish, and what I'm anticipating is for price to come down and tap into like fair value gap area right here, so we could take like a buy entry opportunity. I would put my stop loss below the one candle of the fair value gap, which is also an order block right there. And I would target a 1 to 2 hour, right? And then once this 4 hour is now market structure shifted bullish, and it's creating new bullish PDAs such as fair value gaps and bullish order blocks, and it's disrespecting old bearish PDAs such as bearish fair value gaps and bearish order blocks, and what I mean by disrespecting them is closing over them. Once it's doing that, then the weekly candles are now going to be in an expansion, and they're going to be expanding towards the next draw on liquidity, which can be this up close candle right here, which is a bearish order block right here, or it can come even higher into this bearish order block right here, or it can come back into this bearish fair value gap. Truthfully, we have no idea. We just react and adapt to price and just kind of see what it does, right? And so whenever the weekly begins expanding, that's whenever we could start looking for weekly power of threes, which is going to be like the weekly open low high close. So the weekly candle will like open, like it'll create liquidity on the upside and the downside, right? And then it'll manipulate for the low. And whenever it manipulates, the weekly candle is manipulating, creating the wick, the low wick, and it's tapping into a 4 hour PDA or even a daily PDA. I would look at the daily first to see if there's like a daily fair value gap or a daily bullish order block. Usually there is. And then within that one, I would drop to the 4 hour and kind of scale in and see if there's like another PDA within the daily ones. And then from that point, I would look for opportunity to then scale in and like look for the week. We would look for entry here on that manipulation. This is the weekly wick low. And once we look for that entry, then we would catch the distribution of the weekly candle, and that would be all of our range, and we would take profit. And then this is where the weekly candle will close. It'll create the high wick and close off, right? That's the power of three. So it'll accumulate at the open of the week, which is usually Mondays. That's why we don't trade on Mondays. And then it'll take out the liquidity that it accumulated on Monday. And then that's whenever we look for opportunity, right? And that's going to be on the 4 hour is what we look for opportunity on. And then again, you lurking for like the 4 hour market structure shift. I've said this many times. Right now, we're in a weekly PDA. And because we're in a weekly PDA, we look for a 4 hour market structure shift. Now, whenever you're looking for the weekly power of three, whenever this weekly wick taps into a 4 hour PDA or a daily PDA, that's whenever you drop to the, if it's a daily, you drop to the 1 hour, look for a 1 hour market structure shift. If it's a 4 hour, you drop to a 15 minute, look for the 15 minute market structure shift. And that's where you take your entries. And truthfully, you can like hold them for like 1 to 2s, 1 to 3s, but more and more, like as I'm taking trades, like I see 1 to 1s hit so often, right? Like 70% of the time, right? Versus 1 to 2s. And for my psychology, I feel more confident in my trading when I'm winning more versus losing, right? And I know I gotta fix that, but whenever I am winning more, it allows me to perform better, right? And not trying to get overconfident or anything, but it allows me to like feel like my strategy is just hitting every time and I can be more and more confident in my strategy and I know long term that I'm profitable regardless. So, um yeah, you guys, that's kind of my approach to trading. I can dive deeper in depth, of course, but I don't want to make this video too long. Um I hope that you got a little bit of value from this video. Again, focus on fixing your fear in these markets. Focus on journaling your trades, your emotions, what made you take the trade, the logic, the setup. Hell, journal a full page, dude. Like sometimes these trades take forever to play out. I mean, especially if you're a swing trader. If you're a swing trader like me, I mean, these trades take forever to play out. It gives you so much time to journal the trade, like even throughout the entire time. Like you could fill up an entire page and make sure you date it. Make sure you put the pair, the everything that you need to put on that page and journal it, dude. And identify what is hurting your trading. And from there, go ahead and fix that. And long term, work on your success, bro. We will succeed. We will all succeed. We will get there. The only way we will not get there is if we quit trading, and we will never quit trading. Promise you that. So, again, I hope you got some value. Like the video if you did. Comment down below if you want me to expand more on some of these ideas. If you want me to elaborate or explain a little bit more in depth, go ahead and comment down below. And if you're new to the channel, subscribe. Turn on that bell so you know when I upload. I'm going to be uploading so much more consistently. I know I fell off in the past, but I'm growing and I'm getting more mature and I'm getting better and better and getting more and more confident. And like I said in the past, I felt like I couldn't provide enough value. But the longer I've been in these markets, I feel like I'm gaining so much more knowledge psychologically and, through analysis and reading price. And I believe that I can provide a lot more value now. Um, we're still working on our profitability, of course, as well, because truthfully, I am an emotional trader, and that's where I'm working. And that's where, whenever I talk about trading, um, these videos are not only for y'all, but they're also for me and for me to correct my actions and, just do a lot better for myself because I truly do know the right way. It's whenever I'm in the moment where I end up just, again, doing the wrong way. And that's why I'm trying to, like, change my approach, not only to, um like not my strategy but more so from scalping and day trading to more swing trading so that way I can just be a little bit more, how can I say it, less hyper emotional. That makes sense. But again, um thank you guys for watching. I know your time is valuable, so I won't keep you any longer. We'll see you in the next video.